Hey everyone, and welcome. Today, we're going to talk about something that trips up so many people, trading, and specifically, how we can stop treating it like a trip to the casino and start building it into a real, repeatable system. So, let's get right into it.
So let's just start with the biggest question out there, right? When you see someone who's successful at trading, is it just luck? Are they on a hot streak, or did they find some secret formula that nobody else knows about? It's this question that creates so much of the mystery and, honestly, a whole lot of confusion around the markets.
Well, here's the answer, right up front. The big secret? It's not a secret formula at all. It's a system. That's it. Having a clear, rules-based, and disciplined approach is the one thing that truly separates the pros from the people who are just gambling.
And that really brings us to the first and maybe the most important step of all, a complete shift in your mindset. You've got to stop seeing trading as a series of random, exciting bets and start treating it like you would any serious business. A business that has a plan, that has rules, and that focuses on long-term, steady performance.
Okay, so what does this business plan for trading even look like? Well, it turns out there's this kind of universal framework, a blueprint that pretty much every single solid trading strategy is built on. And it all rests on 5 fundamental pillars. These right here, these are the 5 absolute non-negotiables. Before you ever risk a single dollar, you need a specific, written-down rule for each one. So number 1, what market are you trading and on what time frame? 2, what is the exact signal that tells you to get into a trade? 3, what tells you it's time to get out and take your profit? 4, and this one's huge, what's your rule for cutting a trade that goes against you, your stop loss? And finally, 5, how much money are you going to risk on any one trade? That's your position sizing. You see, if you don't have crystal clear answers for all 5 of these, you don't really have a system. You're just guessing. Now, I really want to zoom in on what might be the single most important rule for just surviving in this game, and that's the stop loss. See, this isn't about feeling bad about one losing trade. It's about protecting your money so you can live to trade another day. It ensures you stay in the game long enough for your system's edge to actually play out.
And let's be absolutely 100% clear on this. For professional traders, the stop loss is not a suggestion. It is not something you kind of fudge because you have a feeling the trade is going to turn around. No, it is a hard and fast, non-negotiable rule. The second your stop is hit, the trade is done. End of story.
All right, so let's move on and see how all this theory actually builds into a real strategy. Because, it's one thing to talk about pillars and rules, but it's way more helpful to see how they come together to form a concrete plan you could actually use.
First, it's good to know there are totally different ways to look at the market. You've got trend followers who live by the motto, the trend is your friend. They bet that a price moving in one direction is probably going to keep going. On the other side, you have mean reversion traders. Their philosophy is more like buy the dip, sell the rip. They bet that after a big move, price is likely to snap back towards its average. And here's the thing, neither one is right or wrong. They're just different philosophies, and you can build a solid system around either one.
So to make this really concrete, let's break down a simple strategy that's based just on price action, meaning we're only looking at the price movement itself, no fancy indicators. We're going to use a really common pattern called a pin bar. Basically, it's a candle with a really long tail or wick, which tells us the market tried to push prices down, but buyers jumped in and pushed it right back up. It's a sign of rejection. And boom, look at this table. This shows perfectly how those 5 pillars create a plan you can actually follow. The setup tells you the market condition you need, an uptrend with price pulling back to a support level. The signal and entry are your super specific triggers to get in, and your stop loss and your target are your predefined exit plans for both a loss and a win. See how specific everything is? There's no room for I think or I feel. It's just rules.
Okay, this is so important. Once you have a system like this all written down, you do not, I repeat, do not immediately go and trade it with your real money. That would be insane. It's like designing a new airplane and just taking off without ever testing it. You have to prove that your system actually works with data, not just with hope.
And this testing happens in 2 crucial phases. First is back testing. This is where you go back in time and apply your rules to years of historical price data to see if you would have made money. Second is forward testing, which people often call paper trading. This is where you use your rules in the live market but with fake money. And this is key because it doesn't just test the system, it tests you. It tests your ability to follow the rules in real time without freaking out. So after all that work, all that back testing and forward testing, what's the one thing you're looking for? Well, it really all boils down to this. You're trying to prove that your system can produce a final number that is simply greater than 0.
And that number comes from this little formula right here. It's called expectancy.
And honestly, this is the holy grail of system trading. Don't let the math scare you, it's pretty simple. It just tells you that over a whole bunch of trades, what's the average amount of money you can expect to make or lose per trade. If that final number is positive, even by a little bit, you have a statistical edge. If it's negative, well, then you just have a very efficient way to lose money over time.
But now we get to the final and maybe the hardest part. You could have a system that is tested, proven, with a positive expectancy, and you could still lose all your money. How is that possible? Because the most important piece of this whole puzzle isn't on a chart. It's right between your ears.
The truth is, a perfect system is completely worthless if you don't have the discipline to follow its rules. Your own emotions will kill your profits. Simple mistakes that we've all made, right? Revenge trading after a loss to try and make it back quickly. Moving your stop loss just a little bit further down because you just can't stand to be wrong. Or getting impatient and forcing a trade that doesn't really meet your rules. These are the exact ways that traders blow up perfectly good systems.
So in the end, it really all comes down to this. The blueprint is out there. It's not magic. It's methodical, it's based on rules, and yeah, it takes real work to develop. But the real question isn't whether you can build a system. The real question is, once you have one, do you have the discipline to actually follow it?